Hello everyone, in this video we will present our investment portfolio management with title 5 Pillars of Strength, Building a Resilience in an Unpredictable Market. This portfolio was prepared by Group 3 that consists of Chandra, Mayang, Jules, and Samia. Our presentation followed the full structure of written report, covering the investment plan, macroeconomic and industry analysis, stock selection criteria, portfolio construction, weekly performance evaluation, risk-adjusted performance metrics, and our final rebalancing recommendation. The primary objective of this portfolio is to achieve 2.5 to 3% over a short investment horizon of 2 months, 2 weeks, from September to November 2025. Because of this short horizon, our strategy, capital appreciation with controlled volatility rather than aggressive speculative returns. The portfolio is constructed to balance growth and opportunities with downside protection. We adopt a top-down investment approach, beginning with macroeconomic condition, followed by industry-level analysis, and concluding with company-specific evaluation. To optimize timing within the short-term horizon, we complement fundamental analysis with technical analysis, focusing on the trend confirmation, support and resistance levels, and momentum indicators. The portfolio is benchmarked against IDX 80, which represent 80 of the largest and most liquid stocks in Indonesia Stock Exchange and serve as an appropriate proxy for the Indonesian equity market.
Hi, my name is Mandarsta. Let's talk about macroeconomic condition and industry sector. Starting with Indonesia's macroeconomic environment, the outlook for 2025 remains resilient despite ongoing global uncertainty. GDP growth is projected at around 5.1% YOY or year-on-year, primarily supported by strong household consumption and a recovery in fixed capital formation, indicating improving domestic investment activity. From a monetary perspective, Bank Indonesia's 25 basis point policy rate cut to 5.75%. It has significantly improved liquidity formation. This has translated into credit growth exceeding 11 year-on-year, creating a supportive backdrop for the banking sector, particularly large, well-capitalized banks such as BBCA, which benefit from rising loan demand and stable asset quality. In addition, the Indonesian rupiah has remained relatively stable, reinforcing foreign investor confidence and encouraging continued capital inflows into Indonesian large cap equities. Moving to industry dynamics, global gold price remained elevated, averaging between $2,650 and $2,700 per ounce, driven by monetary easing expectation, inflation hedging demands, and heightened geopolitical risks. In this environment is highly favorable for gold exposed mining companies such as Antam and MDKA. More broadly, Indonesia's mining sector continues to outperform overall GDP growth, supported by government-led downstream processing policy and strong foreign direct investment or FDI, and particularly in nickel and copper, which are critical for global electrification trends. Lastly, Indonesia's long-term commitment to energy transition and carbon neutrality underpins structural growth in renewable energy infrastructure. So this position companies like Brent as long-term beneficiaries of national decarbonization and sustainability initiatives.
So our stock selection process is based on 7 fundamental criteria ensuring alignment with both certain objectives and risk constraints. First, the price to earning ratio is used to assess valuation relative to earnings with caution applied to a marketing firm. Second, earnings per share reflects profitability and earnings sustainability. Third, the price to book ratio, valuation relative to net asset value. Fourth, dividend yield is considered for income stability, particularly in defensive holdings. Fifth, the debt to equity ratio measures financial leverage and balance sheet risk. Sixth, market capitalization is used to favor large cap stocks with lower volatility. Finally, sector growth outlook ensure alignments with macroeconomic and policy-driven trends. These criteria ensure that stock selection is not speculative but structurally grounded. So for our stock picks and fundamental analysis, we're taking first BBCA. So BBCA serves as the core defensive insurer of the portfolio. It benefits from a diamond CASA ratio above 80%, strong digital banking leadership, and low non-performing loans and superior profitability with AOE around 80.5%. Its valuation premium is justified by stability, liquidity, and earning visibility. We take in second INTM. INTM offers diversified exposure to gold and nickel with positive earnings and dividend potential. Its reasonable valuation, healthy balance sheet, and role in Indonesia downstream mining strategy make it suitable and as controlled cyclical assets.
MDKA provides high growth exposure to gold, copper, and battery metals. However, it remains in an expansion phase with negative earning and higher leverage, making it more volatile and execution sensitive. GOTO represents Indonesia's largest digital ecosystem. Although still loss-making, operational improvements and rising transactions volume indicates progress towards profitability. This stock adds growth optionally but increased portfolio volatility. BREN is a renewable energy company with long-term power purchase agreements, ensuring stable cash flows. Despite high leverage, its debt is project financed and supported by strong EBITDA margins and institutional backing, justifying its premium valuations.
And now we're moving on to the stock allocation. The initial portfolio allocation is as follows: BBCA at 27%, Antam at 20%, MDK at 23%, GOTO at 13%, and Brand at 17%. This allocation balance defensive stability, commodity-driven upside, structural growth, and ESG-linked infrastructure exposure.
Weekly market analysis shows clear sector rotation behavior. Picking stock, particularly BBCA, benefited from foreign inflows and macro stability. Mining stocks such as Antam and MDKA were highly sensitive to commodity price volatility. Brand experienced strong momentum due to MSCI inclusion and energy transition narrative. GOTO remains sideways, awaiting structural catalysts such as a potential mergers.
The initial portfolio value was 1 billion rupiah, with a target value of 1.025 billion rupiah. The portfolio achieved a 2.56% return, exceeding the target by approximately 0.06%. BBCA, GOTO, and BREN were the main contributors, while ANTM and MDKA underperformed. IHSG correlation analysis shows BBCA as the most index-sensitive stock, while MDKA is primarily driven by gold prices, providing diversification benefits.
So for risk-adjusted performance metrics, the evaluation using the Sharpe ratio shows strong efficiency in converting volatility into returns. The Trainer ratio indicates adequate compensation for systematic market risk. Jensen alpha is marginal, suggesting limited active alpha generation. This confirms that portfolio performances was driven by diversification and risk control rather than aggressive stock picking.
So, why we choose rebalancing? So, we choose to rebalance the portfolio because macroeconomic and industry conditions have shifted, creating changes in relative risks and return across sector. So, with lower interest rates, stable currency condition, and accelerating credit growth, exposure to quality-rich cap banks remains attractive but requires reweighted to manage valuation risks. At the same time, elevated commodity prices and strong mining sector momentum, supported by downstream policy and global demand, justify increasing exposure to select mining stocks. Additionally, the long-term structural trend of energy transition strengthens the investment case for renewable energy names such as Brand, warranting portfolio adjustment to better capture this growth. So overall, rebalancing allows us to realign the portfolio with updated macro trends, optimize the risk return profile, and prevent overexposure to sector whose upside is already large priced in. So if we can describe to in one sentence, rebalancing is necessary to align the portfolio with evolving macroeconomic conditions, sector-specific growth drivers, and shifting risk return dynamics.
And now we're moving on to the rebalancing recommendation. Given that the return has been achieved, rebalancing is recommended. Exposure to high volatility such as MDK and GOTO should be reduced, while allocation to BBCA and Brent should be increased to improve downside protection. The new allocation prioritizes earning visibility, lower beta, and stable cash flows, aligning with the portfolio moderate risk mandate. And for the conclusion, this portfolio demonstrates that disciplined asset allocation, macro awareness, and risk-adjusted evaluation are critical in achieving consistent returns within a short investment horizon. We're from Group 3. Thank you.